In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
Welcome, everybody. Merrill Chandler here, your host of the Get Fundable podcast. I got to tell you, things are hopping around here. I don't know what's going on in your neck of the woods, and I don't even know when you're actually hearing these podcasts. Some of my listeners like binge them as soon as they come out. Others kind of spot check, look for the titles that are appropriate that they're really interested in, right? Well, in this episode, we're going to once again we're going to be referring back to one of my Facebook Lives. It was a kind of a Q&A session where I was presenting what we affectionately call here in our production studios the Miss a Month program, because there were some the COVID virus, COVID-19, has created panic, and everybody has been asking about. Banks are offering to let me miss a payment. Banks are saying they're not going to charge interest, or I get to miss 3 months and my credit will be fine. Should I take advantage of this? So we're going to be covering the reason why this is becoming a podcast. It is timeless. What I cover in this Miss a Month a podcast is just off the charts, and it is wise and intelligent coaching for you and how to live your life in your funding life, whether we're in a worldwide pandemic or we are in times of abundance and prosperity. So when we get back, we're going to drop right into the the Miss a Month episode of the Get Fundable podcast. Hey everybody, Merrill Chandler here. So you ready for your next the Get Fundable Facebook crisis update? All right. So I want to spend a minute with you and thank you for all of the commentary that's going on our different Facebook channels, and the as a community we're binding together. I'm watching some of you answer each other's questions. I love seeing the solidarity, because as I've said a dozen times in all the different times we've been together, is that we are in this together, even though we're isolated and what feels like we may be on our own. So today I want to actually address one of the questions that came in, because it was perfectly stated. Thank you, Vivian, for this. And so I'm going to read it so that I can we'll pick up every single piece. And then I've done some research on some websites, et cetera, that are going to speak directly to this. Vivian says, "Hi, Merrill. I was wondering if you could address this topic in your next daily recap." Well, here we are. Thanks, Vivian. "All of my credit card companies, including Chase, Bank of America, Citibank, are letting people skip payments for April, saying that they will reset my account." Remember that point, reset my account. "I checked my online statements and it does say no payments were due in April. When I asked how they were going to report this to the credit bureaus," because she's following all of our instructions we've talked about, when I asked how they were going to report this to the credit bureaus, they weren't really sure, and they kept telling me that they were going to, and they weren't sure. They kept telling me that they were going to report it as no payment due. I know I'm still you told us to please keep paying if we can afford to. The issue is that at some point I may not, I'm fine now, I have a paycheck, but I'm not sure for how much longer. So I'm worried about cash flow and being able to afford the essentials going forward. If I do lose my employment in the next few months, I truly believe a lot of people are in the same boat. I think this would be a helpful topic." Vivian, spectacular, and let's address that now. And we're some of the stuff bears repeating that we've discussed, and I want to bring it all to bear here. Now, most of the major banks, including the tier twos, even the tier threes, Capital One, Citi, JP, Morgan Chase, they're giving concessions to cardholders who are suffering financial hardship due to coronavirus related issues. So when I go to my Facebook or my Wells Fargo account, it actually says, and I quote, if you're unable to make your payment due to COVID-19 related hardships, we're offering a 3-month payment suspension. Now, to request this assistance, they say click on a button and email us through our secure message center. We'll send you a letter via U.S. mail within 7 to 10 days with all the details outlined for your particular situation. Now, what that means, what I'm guessing right now, because I'm not filing these, and so I don't know the results yet, but when they say we'll outline for your particular situation, it is likely that they're doing an account review. And if your account passes muster, they will accept you for the moratorium. We'll get to a moment. If they don't pass muster, then you don't qualify. So it says, if you set up automatic payments with Wells Fargo, which for my students and clients as part of the boot camp, we recommend certain specific circumstances to do so, they're not going to stop the automatic payments. You have to stop those automatic payments. And they're even saying, if you set up automatic payments with Wells Fargo or another bank, like a bill pay or something like that, you'll need to manually stop these payments. So be very specific in your questions, because what Vivian is asking is highly relevant to all of us, right? Now, if you get a hardship accommodation, ask that your payments be marked current on your credit file rather than delinquent. Now, we've mentioned this, but you have to ask that specific question. Now, when Vivian asked, she was told that no payment is due. And to my understanding, I'll get to it in a minute, to my understanding, there is a switch you flip on accounts in automatic underwriting. I'm assuming manual underwriting as well, but in automatic underwriting and in account reporting, you can flip a switch that says no payment due. I'll show you an example of mine from the past. But I'm not 30-day late, a delinquency. I'm not going to risk my financial reputation on what one person says. I need it in writing. I need it. If you even see it on the website, guys, take a screenshot of it for your records, because so many parts of this are part of an automatic process. It's a machine. You make your payment. When it gets credited, the review software comes by. It sees the date that it was done. It reports that on the next reporting date to the bureaus, right? The bureaus then show other lenders, oh, they were paid on time, paid as agreed, or late. So you have to ask. So first of all, do you really need to do it? And that's our number one question. Every single time I'm going to start out our conversations this way, guys. Lenders will, just like they're going to approve you based on your current situation, they're going to watch. And if you need to take advantage, of course, I'll be sharing here in the next little while, next couple of weeks, what I call the financial hierarchy of needs. And we're going to be kind of sharing some of those steps. Well, if you need to protect your family and your home and your survival, then of course credit is not the thing that is going to, if you need to withhold payments so that you can buy food, of course, make the right call. But we want to keep our relationship with our banks, our relationships with our lending partners in the most clean and clear way possible. I am telling you, this is a short-term experience that we're going through. Short-term, maybe 3 months, it could be 6 months, it could be a year, but it's not 2 or 3 or 5 years. We will come out of this. 2008, we were moving forward in 2010, 11. 2 years out. Everything was back in play. And for my real estate investor friends, my note buyer friends, my entrepreneurs, guys, everything was an opportunity if we had the resources to do so. If you burn your business banking relationships, if you burn your relationships with your banks now, guys, you're going to be hit for years to come, a minimum of 4 and likely more. So depending on your situation. So make sure that you need to take advantage of it, then find out what a bank requires. In this one, you have to apply. It isn't like they're just saying a no, but in Vivian's case, she went to Chase, Bank of America, and Citi. I pulled up Wells. So see that there may be differences. Take the time. My roommate and dear friend Riley, I hear him. I'm here at my home, and I hear him on the phone with banks all the time because we talk to each other all the time. He's like an amazing example of a real estate investor who has his experience is vast with single family fix and flips, buy and holds, commercial, as well as multifamily, right? So he's on the phone talking to banks about what their programs are, so that if he has to take advantage of it, he knows what the rules of engagement are. But if you don't have to take advantage of it, he knows that he wants to preserve. And then I've helped him prioritize, just like I'm telling you, prioritize. If you have to go late on something, or if you have to take a moratorium on a payment, choose wisely those moratoriums. In my case, I would take a moratorium on a secured loan, installment loan, before I would take a moratorium on a revolving account, because since it's secured, it doesn't move the needle as much with the credit bureaus, with the lenders, et cetera, because it's secured with real estate and automobile or otherwise. So choose wisely which ones you're going to do. Your credit cards, especially your tier ones, these banks, Wells Fargo, Citi, JP Morgan Chase, and Bank of America, those are the ones you want to hold off the longest you possibly can, because those are your tier ones. They're super valuable, and we want to and that's where we're going to be picking up business lines of credit or other credit instruments as we continue to build out of this downturn and start moving into the upturn. So one of the things, let me share with you in a chapter of in my new book. It's by the way, we sold out the new F word in 30 days of our first printing. It was so, thank you. I just want to acknowledge it was amazing. But I want to read something out of here in the new edition. It's on a new page, right? But it's in, and I added 2 chapters to the new edition. So if you whether you have a copy or not, I'm giving the book for free. So if you'd like a new one shipped to you, go ahead and reorder. It's getfundablebook.com, and just pay for the shipping again, and I'll send you out a new one. We're probably 2, maybe 3 weeks out to get it in your hot little hand with finishing the printing and shipping. But guys, I'm telling you, the printer is going to get it back to us shortly. If you want another copy of it, the book cover is the same, but the contents, I even have really cool stick figures in there illustrating some of the points, stuff like that. So I'm really proud of what we've created. So years ago, I was first introduced to this miss a month marketing strategy completely by surprise. The credit union where I had a car loan would send me a holiday gift each year saying, "Happy holidays. Your payment this month, December, is not required." Of course, the fine print, and this is what we're talking about and everything we're doing, guys, the fine print would indicate the terms. My credit rating was the reason why I qualified for the offer. That's the same thing that I just read in the Wells Fargo website. Let's take a look at your situation. And my credit rating would not be negatively affected. So that's the information that you're looking for. And interest would still be charged for the month, but it would be added to the end of the loan. Now, this was an auto loan. So you got to find out what they're going to do with the interest, because they're accruing interest. If you're not making any payments on 90 days, but they're accruing interest, now this is a pro lender move to offer us. So find out if they're charging interest on that month, if they're adding it to the end of the loan. Those are the things that you've got to look at. So I want to show, guys, this is the ancient technology. We're just bringing it up. We used it in 2008. When it comes to a moratorium or a suspension of payments, the rules of engagement are incredibly important. So here are the points. Find out what it takes to even find out if you qualify. So you got to qualify. Number one. Sorry, I started this earlier. Number one is, do you really need to take advantage of this? Number two is, if you choose to do so, make sure from number one you do your credit cards last and secured first if you have to do it, because secured loans are less sensitive, both in score, etc. If you have to, then you're going to ask about either your loans or your revolving accounts. You're going to find out what the terms are for missing a payment. Does it affect your credit report? And what happens to the interest? Those are the 5 things. The first one is deciding whether or not you need to. The others are all due diligence. You need to know what do you qualify and what the terms are. What happens to your credit to it? How are they counting the interest, etc.? Fair enough, guys. I say this every time, but when we're under pressure is when we discover who we really are after all the niceties are set aside. We find it in our personal relationships. We find it with our children, parent. We find it with our team members at work. We find it with our employees, or to our employees to the employer. Everybody, you're showing up in a particular way. That is what you're going to be known by. And remember, the whole thing that we talk about, fundability, building fundability, etc. We always say that we're building our personal reputation to the banks, right? Our partnerships with the banks. But your spouse, your children, your parents, everybody's going to know and believe that who you are is who you are right now, how you're showing up. And sometimes, even right now, it's a little, we're being kind because it's all just starting. If it gets worse, we may have to really step into our heart and our humanity. So I'm just telling you, I want to be the voice of I'm a realist. I'm open to the possibility that that we are taking a deep dive. But in every way, I want me, my team, my loved ones, you and your loved ones, I want you to be able to come from deliberate and strategic decision making. Today, I've tried to give you the 5 steps. What are the strategic steps? But the first of all those steps is, do I even need to really do this? I hope you prioritize your future relationships with lenders as much as you're prioritizing what's happening right now. If you need to protect everything, of course, make the choices that support you. But I know that we will get through this. We're all going to get through this. In fact, I've had a few clients who've emailed in. They've kind of, they've been either out to pasture, or they're just kind of haven't been paying attention to this, and they reach back out saying, hey, this is going to be another 2008 and I'm not ready. What can we do to get ready? And I'm like, should have been kept going for the last year, but now that you're here, let's go. This is going to be a huge opportunity. So protect your financial reputation with your partners, the credit bureaus, etc., credit reporting. protect your reputation with your business partners, your teammates, your loved ones. Protect your reputation above all, guys. Be kind, generous, and supportive of each other, and we'll get through this. This is Merrill Chandler, your friend, your coach, and your cheerleader in making sure that we do this, and we do it really, really well. You guys have a great day, and we'll be checking in soon. Bye now.
Thank you for listening to the Get Fundable podcast. Please leave comments because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you got to tell your friends about this podcast because we want them to get fundable too.